Have you ever felt like you're always a step behind in the stock market, even when you follow all the latest tips and trends? Maybe you've noticed that the stocks everyone is talking about don't always end up being the best performers. Well, here's a twist you might not expect. In the first half of 2025, some of the best performing stocks on the Singapore Exchange, or SGX, were actually the ones that most regular investors were selling, not buying. Surprised? You're definitely not alone. Today, I'm going to break down exactly what happened on the SGX in the first half of 2025. We'll talk about why certain blue chip stocks soared while others lagged, and most importantly, how you can spot these trends before everyone else. I'll show you the real reasons behind outperformance, the common mistakes retail investors make, and how you can use this knowledge to grow your wealth, starting now. And before we dive in, here's something special for you. If you want to access premium content before it's made public, you can become a premium member for just $1 a month. That unlocks a ton of extra content, including daily market analysis, early insights into promising trends, and deeper dives into specific investment strategies. Think of it as your daily dose of financial fuel. Just click on the membership tab to join and get ahead of the crowd. Hey friends, welcome back to the channel. I'm Iggy, and I cover stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana was ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 950,000 reads and 57,000 likes. I've produced more than 800 videos with over 380,000 watch hours as of May 2025. I also focus on regional and global economic trends. So what are we covering today? First, I'll walk you through the top performing SGX stocks in 2025 and what set them apart. Next, we'll look at why retail investors often miss out and what you can do differently. Then, I'll share the key habits and mindsets that help you spot winners early. And finally, I'll show you how to avoid common pitfalls and herd mentality. Let's get started. Let's kick off with the scoreboard. In the first half of 2025, the Straits Times Index, or STI, started strong, rising 5.3% in the first quarter. But by early June, that gain had cooled to just 2.8%. While the index slowed, a handful of stocks sprinted ahead. Here are the top 5 SGX stocks by total return, including dividends. First, Singapore Technologies Engineering, or ST Engineering, surged an incredible 59%. Next, Singtel delivered us a 23% gain. Semcorp Industries and UOL Group each returned 15%. And Singapore Airlines posted an 11% gain. Notice something? These aren't risky penny stocks or speculative tech plays. They're big established companies. So what made them stand out? Let's start with ST Engineering. They're like the straight A student in the class. In 2025, they didn't just show up, they dominated. Their revenue jumped 8% year on year in the first quarter, reaching 2.9 billion Singapore dollars. They landed 4.4 billion in new contracts, and their order book swelled to 28.5 billion. That's like having a calendar full of guaranteed work for years to come. For investors, that means steady growth and confidence in future profits. Analysts noticed too, raising their price targets, and the company even boosted its dividend payout. It's a textbook case of strong fundamentals driving stock price, not just hype. Next up is Singtel. This isn't just a phone company anymore. Singtel is investing heavily in 5G, cybersecurity, and digital services. Their profit rose 6% to 1.19 billion Singapore dollars for the half year ending September 2024, and they're paying out higher dividends. For investors, this means you're not just buying a telecom, you're buying into the digital backbone of Singapore's future. Semcorp Industries is all in on renewable energy, with 17 gigawatts of green power capacity. As the world shifts to sustainability, companies like Semcorp are in the sweet spot. Their strong first quarter return shows that investors are willing to pay up for companies leading the energy transition. Now let's talk about UOL Group. You might think all real estate stocks move together, but UOL proved otherwise. While some real estate investment trusts, or REITs, saw negative returns, UOL's developer model and successful project launches helped it shine. This is a great reminder that not all companies in the same sector are created equal. And finally, Singapore Airlines. Their 11% gain wasn't just from flying more passengers. A big chunk came from a record 2.8 billion Singapore dollar profit, boosted by a one-time gain from the Air India Vistara merger. This shows how major corporate moves can quickly change a company's fortunes and its stock price. Let me ask you, have you ever sold a stock right before it took off or held on to a loser hoping it would bounce back? You're not alone. Let's talk about why that happens. Here's a surprising fact. The stocks most net sold by retail investors in May 2025 actually outperformed, with an average 21.9% return for the year. Meanwhile, the most net bought stocks lost 2.8% on average. Wait, what? This is a classic case of buying high and selling low. Retail investors often chase what's hot or panic sell winners too early. For example, Singapore Airlines was a top net sell, yet it delivered double-digit gains. On the flip side, Yangzijiang Shipbuilding was a top buy, but it dropped 26% year to date. Why does this happen? It comes down to emotional trading, herd mentality, and a short-term focus. Fear and greed drive decisions. If everyone's buying, it must be good, right? But the truth is, the best investors break this cycle. So, what do smart investors do differently? It's not about being the fastest or the loudest. It's about sticking to the basics. The top SGX performers all have one thing in common: strong business health. They grow revenue, win contracts, and pay dividends. They don't rely on hype. They deliver results. Think of investing like picking a soccer team. You want players who train hard, score goals, and play well together, not just the ones with flashy shoes. Smart investors also look for strategic moves. Major events like mergers, big contract wins, or new product launches can be game changers. But the key is to look for companies that use these moves to build lasting value, not just short-term spikes. And don't forget to diversify within sectors. Not all companies in a sector move together. UOL thrived while some REITs struggled. Semcorp soared thanks to renewables, even as other utilities lagged. Pick your spots carefully. Most importantly, avoid herd mentality. Ask yourself, am I buying because I believe in the company or because everyone else is? The best investors do their own homework and stick to their strategy. Want to catch the next big winner before it's obvious? Here's how. Watch for rising earnings and revenue. Consistent growth is a strong signal. Track order books and contract wins. For industrials and tech companies, a full pipeline means future profits. Follow analyst upgrades. When the pros raise their targets, pay attention, but don't blindly follow. And look for dividend increases. Companies that raise payouts often have healthy cash flow. Let's pause for a moment. What's one habit you could change today to improve your investing results? Maybe it's checking a company's earnings before buying, or setting a rule to avoid panic selling. Small changes can make a big difference over time. So what does all this mean for you? The SGX in 2025 shows that even when the overall market slows, there are always opportunities for those who look deeper. By focusing on fundamentals, staying disciplined, and avoiding the crowd's mistakes, you can put yourself in the best position to grow your wealth. And remember, investing isn't about being perfect. It's about making small, smart decisions that add up over time. Let's wrap up. Here's what we learned today. The biggest winners on the SGX in 2025 were strong, steady companies with real growth, not just hype. Retail investors often miss out by following the crowd or acting on emotion. The smartest investors focus on fundamentals, look for strategic moves, and avoid herd mentality. You can spot winners early by watching for rising earnings, contract wins, and dividend hikes. If you found this video helpful and want to level up your investing game with daily premium insights for just $1 a month, click the link in the description below to become a member. You won't regret having that consistent stream of valuable information that can help you on your financial journey. Don't forget to like, comment, and subscribe. Let me know which SGX stock you're watching, or share your own investing wins and lessons. And if you want to dive deeper into smart stock picking, check out my video on how to read financial statements like a pro. It's linked right here. Thanks for watching, and remember, the best time to invest in your future is now. See you in the next video.